All right, good afternoon. As promised, let's go ahead and get into this week's neutral strategy. I'll be going over the SPY and the QQQ. I'm basically going to do this from start to finish. I want to do this probably for a couple weeks, get some of your feedback, see if it helps you out. And the idea is to go through every step without it being live, so no live questions or anything like that. You can slow it down, you can rewind, kind of go back and go, did I just use the word rewind? Shows my age. You could go back and take a look at it and see if it helps you out. So a couple things. This is how I set it up. So it'd be from setup to finish, and then you use it. A lot of people use this and have used it over the years, and I stopped it for a while, but I wanted to give it more attention. That's why I'm doing it like this. Okay. So first things first, from a Thinkorswim, this is how you do it. You right click here. We're going to go down to drawings, and then we're going to create a drawing set. And the way that I do this is I put in the date, so 7/28, 24, and then you create it. Same thing over here. I'm going to right click on the screen, go to drawings, and then go to create. There we go, drawing set. Same thing, 7/28, 24. Now, the reason why you do this is because if I click here, you'll notice, look at all these dates I have. All right, I've been saving these for many, many years, and they work really, really well. And the next thing that I want to do, so we have both of those set up. We have our dates down here. We're going to go to a higher time frame. So we're going to start with a weekly on both of these. All right. Remember, the way that we do this is everything that I've taught you. All right. So you're doing Fibonacci's, um, you're looking for inside and up, inside and down formations and so forth. We're looking at ranges. Like, you have to figure out before you do your analysis what range you want to be using, right? So if I'm just going into next week, I'm probably not going to, use fibs from here to here. That wouldn't make any sense to me because we know that we're not going to move that much. And so it's kind of a waste of time, if you will. All right. But sometimes we will, just to kind of see like where the levels are and so forth. So I'm going to work through that with you really quick. Just for now, let's go ahead and do it. All right. We'll go from this pivot low into that pivot high. And the reason why I'd be doing this is kind of get an idea where are we when it comes to our Fibonacci. And you'll notice using all the way back here in October, we've actually broke below the 23.6 on the QQQ. So would this level be important? Right? I just put my foot in my mouth. I'm actually going to use this range on QQQ, or I'm actually going to use these levels going into this week. So this is a really important level. We know that this is what we call the extreme bullish channel of this move. And so therefore, if we get back above 466.79, then we know that would be extremely bullish. All right, what about here on SPY? What if things start to pull back? Well, we know that this level down here at 529 is very important because again, we'd be looking for a bounce from that 23.6. Now, that pretty much sums it up though. All right, I don't want to come down here because I don't think we'll hit 443. We could, right? We definitely could. So just understand that if you wanted to put that level on here, you could, but the idea of us coming down about $20 is not really in the cards, especially going right into earnings this week. Okay. We'll see though. You never know. Could be a surprise. I'm going to take these off. And for this, again, I'm not going to use anything more on SPY. So we're going to take that off and that. So we have two major levels. This one, more of an influence this week than this one would be, but we'll go ahead and keep that on. Next thing that I want to be looking at. Okay, let's use the next range. All right, so we're going to use the closer range right here to use Fibonacci. All right, so watch this. We'll go ahead and place it there and right there. And I usually do this with music in the background. So some stuff that I really like to listen to when I'm doing this. Here, I'll show you. I use SoundCloud, and I would use, oops, sorry, this right here, the healing. It's great. It's hyperactive. It has a really nice tone to it. It makes me think, right? It's great for thinking. Anyways, let's go ahead and move on. So now we have different uh, anchor points, if you will, and it's going to tighten things up. Now, what are the important levels that we have here? Well, look at that. 38.2 worked really, really well for this range. This is part of our bullish channel. And look, it bounced from there. So very important. Now look from here, we have the 50. We're going to go ahead and use this. And matter of fact, right away, I'm going to actually pull this up a little bit. Remember, this is our level from anchoring way back here, but I'm actually going to pull it up. Well, actually, I'm going to leave it right here. This is fine. This is fine. All right. And then we have this 50 right there. So we're going to leave these two. And then over here, I'm going to use this level, 529, and the 38.2. Now, what's really neat, once you start doing these, even though we used a much wider range, look how there's confluence now, right? So we originally had this level of 529, but on a smaller scale, this is very close to the 50. So we know that we have two levels that are very close. I love that, from different time frames, and that's a great thing. All right. So I'm going to now take this off. Okay. And we don't know yet. We don't know if this is going to be a neutral in here. We don't know if these are just going to be targets, but we're going to figure that out here shortly. Now, what I want to do over here on the SPY is I want to take these 2 weeks down and I want to figure out, like, what does it take in order for SPY to get bullish. So I'm going to anchor from the top to the bottom. All right, just like that. And then we start to use Fibonacci again. Okay. So in this case, in order for SPY to get out of its bearish channel, it's going to have to get above the 38.2, which is 548. I'm going to go ahead and place a line there. Okay. And all of this has been taught to you in the Fibonacci class. Okay, so it all should make sense to you. So we're just kind of plugging in numbers here, and why, and I'm trying to explain that to you. Now we also have this 544. So this 544 and the 38.2 make up the bearish channel of this 2 weeks down. So look how close they are, 543, 548. It's about $5. That's about perfect. Most of my neutral strategies, guys, are going to fall some $2 and change all the way up to about $5, sometimes just a little bit wider, depending on the expansion of the previous week. Expansion meaning how much price actually moved. So this right off the bat looks like a great level for me to call it neutral. Because what I'm trying to think of, if price is in here and it's between these, it's not that effective, if you will. It would be it's just going to kind of chop around in these levels, and it's just not that important. So we want to kind of stay and be clear of that level. So this is going to be our neutral. And then we're going to come up here. I'm going to use this 50 as the first target. And matter of fact, while we're sitting here, let's just go ahead and use the Fibonacci's as targets. Okay. So you can see here, my target 3 would be 558, target 2, 554, and 551 would be first target. Okay. And then down here, we don't have Fibonacci's. We have that level that we found on other charts. We're going to take that off. And a couple more things. We have an inside and up formation here on the weekly. Okay. So we know that this is a demand zone. All right. So if I were to take this demand zone and go something like this, well, you could see that it falls within the neutral. All right. So, for example, I wouldn't want the neutral. Well, we're just going to keep it here. All right. We're going to keep this here so it all makes sense. All right. We're going to turn this green. And let's do like a 3. So, and actually, I don't need to use that green. I need to use the one that's on here. Give me 1 second. I'm going to right click on this. And we're going to go to this green. That kind of stands out a little bit more. So green, what this means is we go long above that, and red means we go short below that. Okay. Now, the next thing we want to be looking, do we have any indicators that are showing up? Look, there's a trendy edge right there. This could be a target. All right. Let's go ahead and place a level there. Just like that. Okay. Now, because I just used Fibonacci above here, what I want to do now is, well, here in a few minutes, I'm going to go to a lower time frame to see if there's any inside and down formations with this because we don't see any right now, right? So it's just a weekly chart. So we need to drop the time frames in order to find the structure. But I don't have enough. Look how these are all spaced out. They look pretty wild. I don't have enough targets in here at the moment. So I'm going to use structure. Notice right here we have a monthly mid. It might be hard for you guys to see. There is a purple dash line, but it is also in line with this wick. I like that. So I'm going to put a target right there as well. Okay, just like that. And now I'm going to drop the time frame. So we're going to go from a weekly into a daily. All right, things start to look a little bit different. Notice we always take price, we move up from here, and we start to go left. And if we're looking for demand, we go down and then look left, okay? Here is structure. This is an inside and down formation. If I were to go like this, this is identifying our supply. This is a supply zone. So my question is to you, if price were to come up to this level, could we see a rejection? Of course we could. Is this line, remember it's just a Fibonacci line, is it in line with where I'd want it? Not exactly. Matter of fact, I want to be safe in this structure. Again, guys, you know how to find inside and up and inside and downs. And what I'm going to do is I'm going to move this line into just around the wick. See right there. So if I zoom in, you notice now the line is right before the wick. That's because I would expect a little bit more of a rejection, a little closer to that wick. And now I'm just going to kind of straighten it up so it looks pretty. Boom, right there. And then the back side of the wick is right in here. All right. Now, this from 553 to 558, that's just too wide, guys. It's too wide, especially in this type of market where it's a little volatile and a little sideways. It wouldn't make sense like if I told you, okay, we come up here, we trim, boom, make some money. Come up here, trim, make some money. But then like you're in your last position and it gets all the way, say, to 556 and a half, and you're not pulling your stops up and you're being greedy and waiting for 558. It's just too far away for me. Okay. So what I'm going to do is for right now, I'm going to move this down. Okay. And I'm just going to come right to the top of this candle right here. This one right here. Okay. And that's going to be my target 3. Now it's still 558. It's too far away. I'm going to come down and I'm actually just going to use the back end of the supply zone. All right. So now we have 3 targets to the upside, 551, 53, and 56.83. That's not too bad. All right. Not too bad. So what about 548 to 551? That's not bad. We could definitely get that. And you'll notice a lot of times my targets here are anywhere from $2 to $3 to the upside. You don't want to make them too wide. You want to be able to give yourself an area to trim and pull your stops up if you're long there. Okay. But now we know like these are very close to Fibonacci's and very close to structure. So that works out really well. Now I've always done 3 targets to the upside, 3 targets to the downside. All right. If for some reason, say, it's awesome earnings, Jerome speaks and the market goes straight back to being bullish, of course, you could just come up here and use this trendy edge as your next target, which would be 561 and some change. Okay. Now, we have targets to the upside, all right? And then what about to the downside? Like if I go short here at 543 and I have a cover at 540, this is about $3. Is that sufficient? I feel like it's a little far away considering how deep we've already pulled back. And I'm not expecting, at this moment, I'd want to trim a little bit faster. So what I'm going to do is I'm going to use the top of that structure there. I'm going to come up just a tad, so about right there. All right, and then I have this next target down here at 538, 39, 40, 41. So about $3, not bad at all. If you want to be a little bit more greedy, you could take this and move it up to your trendy edge around 539 and some change. But I'm going to leave it where it is. And then again, now what do I have? I have this mid that we used just a few minutes ago, and I have this gap fill. All right, now if you notice, if we zoom in, this gap fill actually didn't get touched by this wick. All right. So I like this. I'm going to leave it. I'm going to come up just a tad. That's going to be my targets. Now, the next thing that I want you to do is take your furthest away target. All right. And in this case, it's this one because I was just showing you if it were to take off from there. I want you to take that All right. And now what we're going to do is we're going to look at the SPY ATR. So average trading range. All right. So let's reduce that. We're going to come over here to SPY. And what we want is the weekly ATR. Now, the weekly ATR is about $12 and some change. What that means is average trading range, average true range. It's moving about $12 in a week. All right. Now, I like to do this afterwards because, again, Fibonacci structure, all that supply and demand is what we're based off of. If you come in and look at the ATR beforehand, your brain tends to do this thing where you're trying to line up to be within the ATR. And that's not how you do it, folks. You want to make sure you're using this structure. Okay. So we're going to pull this back up. And remember, it's about $12. All right. Well, price is at 544 currently. And we have a third target at 556. Whoa, about $12. I can't make this up. I didn't know that. I just now, this is all impromptu. You guys know that. All right. So 12 bucks to the upside. Perfect. We're right there where we need to be, like far as ATR is concerned. But what about 536? Right? 536. That's actually not the same. We're about $4 short there. So that doesn't mean anything. It just means that we could come down a little bit lower. In this case, I would use this structure right here. This is actually an inside and up formation. This is an area where I definitely expect buyers to come in. Now, my thinking is we put a fourth one on here, and what we're going to do is we're going to come up underneath this candle here. See how there's buying pressure? Boom, buying pressure, right? Got this wick. So I'm going to come to about 533, and that's going to get us pretty close, guys. That's $11 or so. We don't have to fall within the $12 range. A lot of times we don't see the exact ATR, but I think this sums it up. I like this overall blueprint that we're trading with you guys. We have 3 targets to the upside, 4 to the down. That's how I would do it. Now, if you want to take it one step closer to kind of really refine those levels, now we're going to take it into a 4 hour and see if there's anything we missed. Okay. For example, all right, so we have this up here. We have an inside and down formation here. All right. And what I find is that when the market is choppy to sideways to down, we don't get big ranges to the upside. So you got to be really, really careful. Check this out. I'm going to take this. I'm actually going to come down a little bit right to that inside and down. That's going to give us about what? $1 shorter than we were. But again, I'm finding a 4 hour inside and down formation here. So I think this is the right move. I want to be safe. It's going to make more sense for me to do something like this. Okay. Then from 550 to 553, is that crazy? I don't think so. I think we leave it here. And then we got the trendy edge up here. All right. Matter of fact, if we were to blow through here and then you pull your stops up, there's a point where we can see this trendy edge. You can see that the trendy edge is aligned perfectly with a 4 hour inside and down. So yes, you can see a huge rejection from this yellow line. I'm going to actually take this 556.83, pull it down just a tad to match last week's mid. All right, right there. And I like this. So really, now what I want you to imagine is you have zones in here, right? This is a zone, right? Isn't that perfect? So we come up, boom, you can reject here. That's okay. You got your two targets to the upside. And now we have something that we can trade with. So that's how I do it from a weekly, a daily, and then we went to the 4 hour. Now let's get over here to the Qs. And on the QQQ, we got all the way to the point where we are looking at the weekly. Now this is obviously a zone. We go a little above and a little below that wick right there. I'm going to go ahead and just place some levels here. Okay, just like that. I'm going to do the same thing. I'm going to go over here that we did on the SPY. We're going to apply that. Boom. We know that this is the bearish zone. Okay. Then we have the 38.2 and we have the 50. All right. So we have some targets up here to the upside. All right. Just like that. And then from here, we're going to use this range. Okay. Go right there. Now, this here. Control Z. If you mess up anything, hit Control Z and it'll put the level back to where you had it. And then I have this level. So I'm going to use the 76.4 here. All right, just like that. And I'm actually going to use this as the neutral. So right there, remember that 466 came from a different level. All right, and then we have the 618 here. So we got a lot of different lines, and don't worry, it's going to look pretty here in a second. Okay, and then we have the 88.7, and then we have this low. All right, so boom, we're going to do that. Now for right now, I'm thinking this could be my neutral. Now this expanded a little bit more. It's been 3 weeks down, so my levels are going to be for right now going to be a little bit wider than I want them to be. Okay. Now, in the past, I've had questions. Hey, John, is this something, you know, where's the indicator for this? And believe me, guys, if I could do an indicator on it, I would have already created that. But the thing is that you have to use, um, actually, Control Z. Let's go back to Control Z. I picked the wrong one. Sorry about that. You have to use your mind a little bit more for these. All right. So it's not something that could be duplicated over and over and over. So this is a neutral. We got 3 targets to the downside so far. We have not changed the time frame yet. And then we have targets 1, 2, 3 up here. And then we have this big old supply zone. Okay. I want to know where the supply zone is because if it gets super bullish again and you lose your mind and you, you're drinking the Kool-Aid, you don't want to forget that even though we have these lines up here, that we do have some major structure up here that could create a big sell off. All right, so we're going to keep this for now. And now what we're going to do is drill down with time, just like we did on the other one. This is going to be a daily. Oh, nice little inside candle. I love that. You could get a lot tighter with this. Check this out. Um, this is an inside candle, and if we go inside and up, we could try to get long here if we wanted to. That's another thing you could do. So you can make this a lot tighter. So this is what I'm going to do. I'm going to duplicate, okay, that level, and then I'm going to take this green one, and I'm going to move it to the body right here, okay? So I'm going to move it to this body, and that kind of lets me know, hey, we're going inside and up. And now our neutral is 461 by 463. It's pretty tight. It's not bad, right? It's $3.82. That's a lot closer than before. All right, now what if we break down from 461? I think that you want to come up here to the trendy edge. So we're going to move that up. That's about $2 and some change to the downside to cover. And plus, your trendy edges are support when they're below you. You're looking to buy, right? So we're going to leave that there. 458 to 453, that's pretty far away. What I'm going to do here is I'm just going to come up. All right. And this doesn't have to be perfect. I'm going to go just a little bit before the low. And that's going to be 456. It's going to be about $2.80. And then I'm going to come up here and we are going to use this trendy edge, 452.33. All right. So I'm just using what's on my charts. I'm using this wick over here. The idea is that, if they scare some people, I've talked about this in the BMA about the rounding bottom. If they scare some people, I'd expect them to scare them right before we get to the low, and then boom, we bounce from there. So that's why I'm using that 456. Okay. So again, I'm using a little bit of my experience in the market to use with these levels. And check this out, 473 just happens to be right at the top of the cloud. Remember, when we're underneath the cloud, if price were to go up, we're looking for it to be resistance until it's not. Now, I do know if we open up, this cloud's going to move. So I'm going to actually move this down to about, where it's actually underneath the cloud just to be safe. Now we're going to go over, all right, and we're going to look at the ATR for the Qs. Okay. And this is probably off because they probably move a lot more than what I have on here. $16 is the average. Now we come over here, 479. Oh, we're actually, I don't know, we're pretty close there. This is, by the way, this is the inside and down formation. Okay, right there. Also, inside and down. This is perfect, right? I'm actually gonna bring this down just a tad, about right there. All right. Now, if you want, if you're not, sharp on your math, just take a calculator, okay, and look at the price, my highest price. We're not going to, remember, we're not going to use this one, but we're going to use this one. So just say 478 point, what, 78, and then minus 462.97, and that's 1581. So we're like right there. All right. So this is perfect, but I'm going to be safe. Like I said, I'm going to be safe because it's volatile and I want a little bit more, more targets here on the Qs. They tend to run and or dump a lot more. So it's okay for me to have 4 targets there this week. All right. Now this is pretty tight. It's not too tight, but it's pretty tight. And we were able to do that by just looking at the formation. The idea is that, let's say we gap up tonight, your next day could be an inside enough formation, and I want you to be able to get long and into those targets instead of waiting $6 to get long. Okay, and then if we get short, our targets I think look pretty close here, but the 452 is the only thing that's really off, right? We have 452, 462, and we know that it could move $16. So let's go ahead and add a fourth target to the downside as well. All right. And where would we do that? I mean, the structure of the inside and up formation is right here. Okay. And again, if you guys don't know what that means, please watch the video here on YouTube. Most of you are probably members and know all of this, but that is an inside and up formation. And the back of it's right here. So we're going to put one more target just right at the back end of that box. Okay, just like that. So one thing to take into consideration is that this came into an inside enough formation, guys, on the daily, and that's why it worked. And if we dig back in, that'd be about 452 and then 446. So let's look at our numbers now. Okay, just for fun. 462.97 minus that last number down there, 446.53. 1644. I can't make this up. So it's perfect. All right, guys, I really love these two blueprints. This is what we're going to use. And if you don't know how to trade the neutral strategy, please watch that video. I hope this really helped you. I'm sure in the beginning it's a little confusing, but it starts to come together the more and more you watch it. Another little hint, when I'm watching videos and learning stuff, um, increase the speed on YouTube. You can listen to me at probably 1.5 or 1.3 or something. It's quicker, it's faster, and you can take it in a little bit longer. Okay. And don't be afraid to stop and look at this stuff. And please, please give me a like and some sort of feedback because if I don't get enough, I probably won't continue this. All right. Thank you so much. Have an amazing day. See you soon.